Hi, everybody. This is Kevin with Leading Edge Financial Planning. And today I'm going to talk about assets and what are some of the better assets and maybe the less optimal assets to buy. When you make a big income from work, like pilots, physicians, etc., you have the ability to buy assets, and the assets you choose have a lot to do with your future wealth. So, all I'm really trying to do today is to get you to think a little bit about this. Couple caveats. Number one caveat is that we all buy non-productive assets. Okay, this cup technically could be an asset. Okay, it has the rifle company on it. I forget the name of that company, but I could maybe sell this for a penny. That's really what an asset is it has value. So we all own assets that don't produce, a bunch of future wealth, and that's okay. So that's the first caveat. We all own non-producing assets. Okay, most of us have cars. Most people don't get wealthy off of a car. And number two, I'm going to be discussing some asset classes that are maybe not the most productive asset classes, but it doesn't mean you can't get wealthy with some of them. You might get wildly wealthy because everybody knows that they're not creating more land. Everybody knows that real estate is something that, people need. Everybody knows that gold has always gone up in price. And so everybody knows all these things. All I'm saying is to think about the difference between productive assets, non-productive assets, and speculative assets. That's all I'm suggesting. Some of the assets that are non-productive also are not only assets, they have value. If I sell it, I can get money. But to continue to keep that value at a high level, I need to feed that asset, keep it looking good, keep it stored, keep it fixed up, don't leave it out in the rain, et cetera, et cetera. And so assets can also cost you money. And the final point that I'll make is that when you're not investing in productive assets, that's okay. However, there's an opportunity cost when you invest in these other assets that you cannot invest in productive assets. So let's talk a little bit about the families that are rich pilot families. And let's talk about some of the families that are, I'm going to use the word poor. Nobody likes to use the word poor, but there was a book called Rich Dad, Poor Dad, and that's kind of what I'm going off of here. Rich pilot family, poor pilot family. What are the wealthier pilot families doing that we see at Leading Edge? And these are not recommendations. This is just some of the things that we see, is we see more productive assets usually, all other things being equal, will produce more wealth. So let's start out with the diamond example. So a diamond is forever. That's what De Beers marketed forever. Not forever, but as long as I can remember. De Beers used to say diamonds are forever. Diamonds are a girl's best friend. They did all this marketing. And diamonds are absolutely an asset. If you take a diamond and it's a good quality diamond and you sell it, you will get money for it. But diamonds are fascinating to me because over the last few years, there's been a boom in selling diamonds that are actually created in laboratories. They're called lab-grown diamonds. I don't know if you knew about this thing. I did not know about it until I was doing some research. And so lab-grown diamonds are real diamonds, and they're produced in laboratories over weeks to months. So you can grow your own diamond in a lab now. How insane is that? Usually diamonds that you pull out of the ground, they take billions of years to produce. They're both carbon. They're very similar. There might be some slight differences, but you can't tell. The naked eye, you can't tell. And there's different types of light that you can shine into these diamonds to know which ones are grown in the lab and which ones are not. But that flood of grown diamonds, okay, that flood of grown diamonds has actually caused the diamonds that are pulled out of the earth to go down in value. And I read something recently. It was 26% downturn. I think it was over the last year, but it could have been, from the high. But anyway, you bought a diamond a couple of years ago. You have an asset, okay? And now you say, I want to sell this diamond. Hopefully it's not because the D word, but anyway, I want to sell this diamond. It was worth $10,000 3 years ago. Now I can only get 7,000 something dollars for it. And because of these lab-grown diamonds have come in and created a supply-demand issue. And so a diamond, to me, you're investing in the relationship. Let me just make sure I say that so I don't get in trouble. You're investing in the relationship. You love your partner, and that might be the reason why you're buying them diamonds, or you love your children, you're buying them diamonds. It's an expression of love, but diamonds are a speculative asset. So to me, that's one of the primary examples of classification of assets. So an asset, it's not complicated. It's just something that has a value and you could sell it for something and get money for it. That's all an asset is. So when we think about assets, the assets I would like to suggest that are probably the most productive assets to create wealth, they're assets that actually produce return. Okay. So sometimes people with stocks, especially, they say, stocks are risky. I don't want to invest in stocks. In the past, maybe they've done well, but the reason why stocks are a productive asset is that if we give our money to these companies and they're able to make money selling goods, services, etc., and they're able to make more and more money, then that's producing dividends and capital gains that investors can have. So that's a productive asset. Bonds are actually a productive asset. Recently, we've looked at some cash balance pension programs, and pilots are really upset about the amount of bonds that are in them. Sometimes pilots are upset, not always, but bonds are still a productive asset. They produce interest. And so as far as assets go, they're not bad. They sure beat buying a $100,000 sports car as far as the value of them. Now, a bond you can't drive around and you can't look really cool. And I get all that, but they're still a productive asset. So bank accounts are considered productive assets as well. You might not get a lot, but you're going to get something. Rental real estate is a productive asset. Again, we've had people in the past that have said, oh, I don't want to do that. I don't want to do rental real estate. I get it. I get it. But it is something that will produce an income if you do it right and you focus on being a professional, and it will produce income. So businesses. I know a friend of mine said, I'd rather invest in my business than invest in stocks because my business is growing much faster than the stock market. So again, you're investing in something that's producing. Intellectual property is an interesting one. So people can create their own asset. I know my brother Andrew, who's a rock and roller, and he created music for Zero Dark 30. His band did, Rorschach. He's still getting royalty checks. So if you wrote a book, if you're a professor, those are examples of assets that produce. And now most of our pilots are not writing books, but there are some that are doing that. So what are examples of non-producing assets? Well, we all know the luxury car. If I had a nickel for every time a client called and said, oh, I just bought a car, and they sounded like they're guilty, I'm like, don't be guilty. That's great. You bought a car. Oh, it's new. No, that's okay. You need to enjoy your life. The asset of life is one of the greatest gifts there is. And we also need to enjoy our lives as well. So you don't have to feel guilty about buying non-productive assets. You just have to realize that's what they are. Okay, large yachts, private planes. I know that hurts for me to even say because we've talked to many pilots about planes. And we think if you're going to buy $1 million plane and you can't really afford it, well, that's really more of a destructive asset. But if you're buying a plane that's not that expensive to operate, then that makes more sense. So another part about the yachts, the planes, and the cars that I think is another designation that we need to think about if we want to be in the rich pilot family is that how much is something going to cost to keep up? Okay, so luxury cars, they can cost a lot. Again, if you only own them for 4 years, maybe not as much. Yachts and private planes, everybody knows the cost of keeping them up. The best day of a boat is the day you sell it, followed by the second best day, which was the day you bought it. Maybe it's vice versa. I don't know. Vacation homes that are underutilized. This to me, again, I thought about having a second home. I think it would be cool to have a place to go, the kids to go to, the grandkids when they come. I think that would be really neat. But owning multiple homes, now you own multiple assets that you need to keep up. And they could produce a return because real estate does go up over time. I get that. But you can go for years and years of owning 2 homes and just having to keep them both up. And that's a tremendous expense, not to mention that you have to sell it to be able to realize its value. And so second homes to me is something where if you're able to go to Airbnbs, pay a little extra money, a lot of times it does make sense to not own a second home. Now, again, if you have more money than you know what to do with, if your financial plan looks great, absolutely buy a second home. Collectibles. So collectibles are interesting because if you buy enough of them, then you got to put them somewhere. So if you buy a lot of gold, you can't keep it in the house. Somebody will steal it and they'll say, why did you keep the gold in the house? So you have to keep it somewhere. If you own artwork, you have to make sure it's temperature controlled, et cetera, et cetera. Wine. All of these things have some type of expense to them. But more importantly than that, tastes change. And so if you know somebody that owns a lot of, possibly they've made a lot of money in art, possibly they've not. A wine collector, usually they drink well, but do they really make money on that? So again, you can have some of these things. If you go crazy, then they can hinder wealth building. The third type of asset, so the first asset is productive. The second asset is a non-productive asset. Sometimes they depreciate. Sometimes, like vacation homes, they do go up in value. So a vacation home might be less bad. The third type of asset is speculative assets. So if you speculate at the wrong time, if you get it wrong, you could be in the poor pilot family. If you get it right, you could absolutely be in the rich pilot family. So certain cryptocurrencies, the hope and the hype, that's what it's all about. And you could get very wealthy with it. Penny stocks was the cryptocurrency when I was a kid. Everybody was saying penny stocks. It's only a penny, so it can go up like crazy, or it could go bankrupt. Trendy collectibles without long-term value. Flipping. So there's many people that flip, and it doesn't always have to be just just flipping houses. Although, if you buy a house and then you try to sell it, all you're doing is going from buying it from one person and then trying to find someone else. It's basically looking for a sucker if you're just flipping. Now, if you're flipping as a business and you're fixing up the house, that's a different story. But sometimes people will flip all kinds of stuff. And again, you're looking for a buyer and a seller. Flipping your own stuff after you no longer need it, that's to me very smart. But the reason why some of these speculative assets are dangerous, and they're usually illiquid, and you have to find a buyer, is because if, like the diamond, prices go down, if that possibility happens, you could really be in trouble. Now, yes, stocks can go down in price. I get that. But again, if companies continue to produce revenue, they continue to sell stuff, have services, they will continue to produce returns. Not guaranteed, but it's highly likely if you own a lot of those companies. So just having a well-rounded spectrum of assets, have your productive assets, have your fun assets, have your speculative assets if you want. I would say not to have too many of them. The productive assets, that's how we see as financial planners, people that work with stocks and bonds and other investable assets. That's how we see families getting wealthy. That's how we see it. Having multiple houses, 5 cars, a bunch of assets, artwork, stuff on the walls. Those are the things that can really hinder the growth. So I would just ask you really to think through when you're going to buy an asset. What type of asset is this? How does this fit into my overall diversification of assets? Not just stocks, bonds, commodities, but stocks, bonds, commodities, non-productive assets, assets that I need to feed, like a second home, or a boat or plane. These are things that I have to upkeep, or children. Children you have to feed as well. But how does this fit in to my overall wealth production? And again, if you're going to do rental real estate, if you're going to do stocks, bonds, other productive assets, to us at Leading Edge, that is a potential way for you to become the wealthy pilot. Thanks so much for watching.
Leading Edge Financial Planning, LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Leading Edge Financial Planning and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.leadingedgeplanning.com. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. you should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such.